All right, hi. So welcome to Monday's Q&A. It's episode 30. Wow. So thanks very much for those of you who are joining in now and later on. I've got a great week ahead. I hope you have too. It's literally non-stop meetings all week because of course January should be packed like this. It should be non-stop. People who have been thinking and ruminating over whether or not they work with you over Christmas and the period before, you know, being nailed down and you getting out there and meeting people. So hopefully it's the same for you. Get out there, make sure you're meeting as many as you can and get yourself some new customers on board, but obviously catch up with those who've been working with you sometime as well. There's a little tip, by the way. It's something that a multi-millionaire CEO who I once worked with told me. He said one thing that people don't seem to do that much is they get customers and then they move on and look at the new ones all the time. But in addition, he said you should always just dip in, even if it's just once a month, actually connect with them, give them a phone call or have a Skype call or something and just see how they're doing. So it's something worth doing, and I always do my best to do that with my clients. If it's a case of a Skype call or something, it does keep you in tune with them and you never know what things you might pick up from it, so it's worth doing. Thanks very much for everyone who have sent in questions. So whenever I pose a question on Facebook, something like if you could ask a question in sales, or if you could ask a question about a startup, then there's of course for these Q&As. And today I've put together 8. I usually do 8 questions. I think that's quite a good number for about 45 minutes to an hour. So Janelle, Cal, Colette Demetrius, Jason Grant, Jonas Hindrato, Priya Kaur, Carolina Sheik, Ruben Kong and JP Lott. Thanks so much for your questions. Apologies to anyone who I won't be answering questions of. I'm just doing my best to get around everyone, and if anyone's been missed off, I'll of course happily answer your questions anyway. So it seems to be there's a bit of a theme this week. People are asking a lot about investors, angel investors, and things like that. So trying to kind of curate the questions in a way that they are going to help out and kind of complement one another. So let's go. First question here is from Janelle Cow. I hope that's how you say your name. And she said, how do you stop client scope creep? Now, just to explain, those of you who aren't sure of what client scope creep is, if you break down the words, it explains it. When the scope of working with a client is usually nailed down at the start of a transaction or a relationship, and sometimes that can creep in the sense that it can grow. So what I'm talking about here is, for instance, if you were to have an extension built on your house and you decided to work with someone and you decide on what you're going to do, but then over time you find that actually more work needs to be done, and then the builder or construction company that are building your extension, they keep adding more and more things that need to be done, and you end up with quite a bill at the end of it. And of course it works both ways. If you're providing a service for someone as well, it can be that you keep asking for more things from people as a client, and indeed that can hack a lot of people off. So the reality is that all of this tends to be alleviated when you have a good connection with someone and when you have a good sense of rapport and communication. So from the word go, what's so important is you recognize the value of having open lines of communication. That doesn't just mean you get on with someone and you trust them quite well. It means frequent chats with them, especially if you're in the early stages of working on a project with someone. So let's say, for instance, I get a new client. It's been established at the beginning what really we're going to be doing together, but it's important to stay tight with one another and work close with them. And this year there's a lot of companies I've invested in and I'm going to be working with. Some of you I know who watch this, I'm partnering with you or have already partnered with you. And it is the case, of course, that things will always move. It might be that we do a bit more one month, it might be we do a bit less together, but in the main we are staying tightly in communication with one another. I think that creates a foundation of openness, and it means that you can sense if things are coming over the horizon that are going to require you to address the fact that it might be the scope of the project is starting to creep. So be really clear. I mean, this is kind of obvious, but it's still important. Firstly, be really clear about what you're going to be doing. for your client, okay? So that they don't have a false expectation that other things will be expected of you. Now, inferment or inferring that certain other peripheral things will be added to what you're going to provide them is where the grey area is. And it might be that the client just presumes you will do other things as well, rather than being absolute on specifically what it is you'd said you'd do. For some businesses, this is straightforward, because you know, sometimes it's a case of saying, well, I will supply you with X, Y, and Z, and that's the end of it. There's nothing else to it. But with others, especially consulting and services, often there's a little bit more that can or could not be done, and it's hard to measure exactly what's being provided. Now, this is why, on the second point I was going to say, this is why it's crucial to get things written down, all right? So even if you're working with a friend or a relative or something like that, it may feel a bit weird, but really you should write things down. Get things written down in some kind of a contract, even if you're not able to afford a lawyer or something like that. At least write it down, bullet point, precisely what it is that you understand the work to be, and that they understand the work to be as well. Getting it in an email or something makes life very simple, because it means you can refer back to that, and it means also that their expectations are managed as well before you go ahead and work together. That's so important, because there'll be there will be times where clients come to you and say, I need this from you, I need this as well, could you also do this as well? And the thing is, this is where it's your discretion, because every business is different. You may choose to go above and beyond and do a bit more. But the problem, this is the reason why probably Janelle has brought this question up, the problem is, if you consistently do more than is expected, okay, then yeah, that's great, but it means that they will naturalize, your client will naturalize to expect more than is expected. And what happens there is, you've said, I'll provide you this much value, and in return you give me this much investment. So you know, maybe you get this much money or whatever it is. When you start exceeding, giving them more value, of course they're impressed to begin with, but if you keep doing that, you end up naturalizing them to this much value is what they get for this much investment. And so then they come to expect it, okay? And the nicest people in the world can still naturalize and come to expect certain levels from you. All that is to say that for every client that you give another 20% to and do a little bit more for, out of choice, it means that for every 5 clients, statistically, you're going to run out of room for a 6th, because you're just going to be overworked doing more for people. But look, experience helps with this kind of thing. It's a case that if you've done several projects the same, you can always say to a client, this is what I expect to actually need to do, you know. For instance, I'm going to make a cake for this person. Oh, I'm sure it could be done in 3 hours, but my experience tells me it usually takes me 6. Well, I need to share that with them. And probably they want me to go back and change a few things. Well, that's something I need to be aware of as well. So again, in a contract, you might want to put something like, and a good place to see this in action is in Fiverr.com, where where people provide services, for instance, for $5, where they say, for instance, I will design your web logo, okay, as an example, and it's designed for you for $5 in this form, and you're allowed 1 change afterwards. So they're being really clear. So if you don't like what I make, okay, you're allowed it to be changed once, and after that then you have to pay more money. So being fairly absolute about what things might come up is a good way to kind of stop client creep. But for some very complex services, it can be quite a difficult area, and I just think there's this balance. For some things you need to suck it up, because it's going to make them feel good, and if they're the kind of person that's going to tell the world about you, then wonderful. But for others, sometimes you have a pain for a client that you didn't realize. You've got to be direct with them and say, look, I feel like this is no longer becoming equitable, and we're actually starting to move to a position where this is way more than that was originally agreed. And so you need to have a level of tolerance, I think. Don't get a bit pissy with someone if they ask for a bit more, because you know what, that would be quite a nice thing. There's a good reason to get a great testimonial from someone. So there's no really good answer for this other than once you've got experience, that will help. That's not a great solution if you're starting out, but write it down is the best thing. Be clear as day, as far as is possible, at what exactly is going to be provided. Don't have any hearsay or gentleman's agreements or anything. Write the thing down, nail it down, email it to them. And whenever I email that kind of thing to people, I always say, can you confirm that that is, you know, what our discussions actually looked like? So they're saying, yeah, I'm happy for that. Then if they want more from it, we can of course discuss what that looks like. Okay, so I hope that helps. But it's a really good question. Next question is from Golet Demetrius. Golet, I don't know if you're French, sorry, I don't know how you say it. He says, what are the best places to find angel investors and establish credit? Apologies, I've still got a cough from last week. There are a number of places where you can find angel investors. Obviously, you only need to go to Google to type in the likes of angel investors, and you'll find Angel's Den. Here in the UK, you've got Angel Investors Network, for instance, and all these various places. And what you've got essentially there is a place where some investors will go because they know that a lot of people will come there and they have a rich seam of leads they can work from. But you'll find that they will be swamped with anyone and everyone who's wanting some cash. So you're going to have to really shine there. And I think that it's important to understand there are different ways of getting investors, but also it's important to understand you don't need one. Sometimes you can have a few. So aggregating capital means instead of getting one person to give you, say, $100,000, you could have 6 people giving you, you know, whatever it works out to be, $15 and a bit thousand. And if they give you a little chunk each, then that adds up to your 100. And so that's a better way of doing things. Also, you've not all got all of your eggs in one basket. It sometimes is more valuable to have several people you're working with. But at the same time, the balance there is if you have too many investors you're working with, of course, you have to keep happy so many more investors as well. So that's something to think on. There's no question that it should be thought of. If you really feel you need capital, you should look at friends and family, if it's for smaller amounts perhaps. It's something to explore, not necessarily to do. I'm not saying you should, or above angel investors, for instance, because there's real value in being keeping things professional, keeping your family out of it. There are obviously risks involved. If there were no risks, then people would happily give you the money. And that's a really important tip, by the way. The money is definitely there, is always there for the right opportunities. Angel investors aren't tight. They're happy to give away the money, but only if it feels like they're going to be getting returns from it, as you'd expect. But with family, for instance, you are emotionally, as I talk about in the 8-Step Startup course, you are emotionally going to be in their pockets to a degree. And even, you know, if you've got a close connection with someone, even if they say, look, no strings attached, there's no interest here, pay me when you can, you're still going to feel, because I know what it's like, you're still going to feel to a degree, you know what, I feel I should do well by you and your money. And whenever you see that cousin or aunt or whatever it is, you're going to feel this urge to report back to them on how well the investment's going, for instance. So that makes things a little difficult, but at the same time, you tend to find your family and friends do give you more favourable terms, okay? What I do think is that a lot of, and my experience says that a lot of angel investors don't wear the fact they are an angel investor on their sleeve. They don't necessarily say to everyone, I'm an angel investor. There's plenty of posturing. A lot of people like to think they're worth a lot and things like that, and they like to splash that about. But many don't. And what you'll find is that there's also a lot of people who do look for opportunities, and I wouldn't class myself as an angel investor, but I have invested in companies because if there's a great opportunity and I see a lot of right things about it, well then why wouldn't I? It makes sense to make use of your money in a more intelligent way than just sticking it in a really low rate ISA or you know, bank product or something like that. So just think on that. There are other people out there, people who are influencers in your space, might be keen on essentially donating some money to your cause because they really buy into it, and that might be worth, you know, exploring a bit as well. But I do feel that a great place to engage with investors really is LinkedIn. And I think it was said once, you've got to knock on a lot of doors to get a yes here. So, you know, you can't stop after 1 or 2 say no. You should be expecting, like with anything, expect 30, 40, 50 to say no before you maybe get one that says yes. And with that in mind, you need to spend a strong amount of time courting angel investors that are, say, in LinkedIn, but trying to get as many as you can in terms of irons in the fire, because you're going to need to work on the basis that many may say no. And for everyone who's asking for money, there's probably 100 others asking for money for the same reason as well. So there's an abundance of opportunities. These people therefore can't do everything. They want to decide on the right ones. So I think there aren't best places, but there are a lot of places, and there's no harm in making use of the lot of them, I would say. So hopefully that helps. Establishing credit, you mentioned here. You could look at banks as well. It's your call. You might feel it's more robust going to a bank, but and the terms are more straightforward, and there's less emotion involved perhaps. But at the same time, lenders they tend to be a little bit more wary. And certainly for me, and I think for many investors, you'll find that if someone's going to invest in a company, they often do it because of the person. Okay. And yeah, the stats and results and the you know the data and the likelihood of getting a return is obviously of paramount importance. But over and above most things, it's the ability of that entrepreneur itself to convince the entrepreneur the investor that probably they're a really safe bet, because they're a great pair of hands. They've got experience. They've been an entrepreneur for a while. They've been owning a business for some time, whatever it might be, and they know their space well. Whereas lenders, to a degree, are a little bit more checkbox related. You know, can you guarantee it? Have you got half the money yourself? What's your income like right now? Well, if that all looks good, we'll probably be giving you the money. And the fact that they might not resonate with you on a personality level, that might not actually come into play at all. So that's your choice if you want to engage in that, but you tend to find it's harder to get the money leverage from lenders who work that way. Let's move on, because that could be a massive topic otherwise, but hopefully that's some broad strokes for you, got it. Jason Grant has written, what are the best practical ways to get concrete results as soon as possible? Well, look, there's something, again, if I refer to 8-Step Startup, there's something I brought in to that course, and it's this awareness of effective and efficient approaches to generating new customers, for instance. Effective are approaches or methods that work really well. Efficient are ones that work efficiently, in the sense that you're not required to use huge amounts of resources and time and things like that. The dream is both at the same time. The best methods are ones that are very effective and also that are, you know, tremendously efficient. So those who have a strong awareness of Facebook ads, and I'm talking about the people who make millions from Facebook ads, these are people who are making Facebook ads effective because they work, and they know the science of how to get them to work, and the funnels and the language and the call to actions and things like that, combined with the fact it's tremendously efficient because they click a button or several buttons, type their copy, maybe they spend half a day doing it, but then they can reach literally millions, if not billions of people. So with that in mind, they can be tremendously efficient. But starting out, to answer this question, the best practical way to get concrete results is to understand that the best way to engage with real new people who might buy your product is one-on-one. For every additional person you add that you're trying to connect and communicate with, you dilute to a degree your ability to service that person and convince them. So the most effective way, I believe, overall, and this isn't necessarily the most efficient way, but the most effective way to get results, as in the terms of getting new people to buy into you, is to engage with them yourself. Okay, and the most effective way of doing that is face to face, because the person is there. People will buy people, and humans therefore buy from humans. So if you are in the presence physically of another person, you're in the best position, in my experience, to sell your product and get a great result. If you take a step away from that, a less effective way to still engage with one singular person is on the phone, but that's more efficient, because I can make 10 calls in the time it takes to have maybe a 10 or 20 minute meeting. Okay, so I can be more efficient, but I'm less effective. I can send emails to people. I can be even more efficient now. If I decide to use a template and send it out to my email list and hundreds of thousands of people receive this email, I'm being very, very, very efficient in terms of resource usage, but I'm not being as effective as meeting that person face to face. That's why people get so much more. You know, I could answer these questions in a text-based post on Facebook, and that would be more efficient, because I could write them out and probably it would get all the detail down, no one would miss anything. But I find it's more effective because by doing it this way, because then you can engage me differently. Arguably, they take about the same amount of time though. Okay, so with that in mind, you need to think, to get results, you need to be where the money is physically as much as you can. Okay, so to get the best results, if I need to get if you want the, because you've not specified specifically what results you want, or rather, you know, in what things you want the results. So if I wanted the best concrete results, the most practical ways to get those in learning from someone, I would go to visit that person. So if there are mentors or gurus out there, and there are people who've done this, for instance, with me, with learning from me in terms of sales, some work with me via Facebook chat, but others have come to London and they've met me and we've had lunch together and we've learned one-on-one, and that's much more effective for them. So the best way is to get in front of that person directly. It's not necessarily the most efficient way, but it's more effective, and that way you can guarantee things. And it all comes down to this. Look, if I want to generate, I remember this years back, if I wanted to generate more income in a certain month, if I felt like the income or revenue wasn't as high as it should be, I would spend my time not necessarily being as efficient as I could, but certainly being very effective. So I would target individuals and I would engage with them, I would spend time with them, and so much more can be given that way. And as a result, you end up with more people likely buying. That works really well with high ticket products. If you need to get 2 clients in a month, then spending time with people is a really great way of doing it. If you've got a low ticket product, then maybe it's a couple of dollars, you need to spend time with a huge amount of people, and so it's very inefficient to meet them all face to face. You need to be making sure that you've got a lot of automation going on, and therefore things are much more efficient. So hopefully that helps. That's the way I view things. Jonas Hindrato, thank you very much for your question. You've written, who do I see first? Who do I see for my first business step? Well, your first business step, really you should spend with yourself for a moment and think, what is it I need to be doing? Make sure you have we could presume that you know what it is you want to be focusing on. Okay, for your first business step, you should be looking at who in your space already does your kind of thing. Okay, and then looking at the best people, the top 1% or even 0.1% of people in your space doing your thing. So the really successful ones. So who do you see first? The very, very best at the very, very top. Okay, if you checked my posts out yesterday, the Forbes 30, was it 30 of 30 or 30 and 30 list came out for 2017, which is those that are under the age of 30 who are influencers across 20 different industries. Okay, so these are lists of people who really made an impact in sports, music, science, business, finance, whatever it might be. And it's interesting that these are the very, very top people, and they've all, I think the majority of them by a long way said when they interviewed, the number one dream mentor they had was Elon Musk, and that he is seen as like the Uber entrepreneur, because he's become a multi-billionaire with multi-billion dollar businesses. So that's the person you should go learn from first. You should see about that kind of person. What's a mistake is saying, I want to work in industry X. I've decided that. I've got a mate who's starting there as well, I'll go and see that person. Of course there's value in seeing that person, especially if he's a bit further down the road to you, but there's much more value in seeking people who are as high up as you can reach. Don't get disheartened if you can't reach people at the absolute apex of your industry, so drop down a bit if you have to. The mistake is waiting around and going, I can't get hold of him, I can't get hold of him, I can't do anything yet. Don't be paralysed by it. Seek people who you can get hold of. And that's why you must, as usual, approach many different people who are doing well at what you do, and take a bit of an average, but of very successful people. What one says isn't necessarily factual or gospel or definite truth. A good example of this, and I'm sure they'd agree with me if they saw this, is people like Gary Vaynerchuk, people like Tai Lopez, for instance. These are people who are very influential online. Just because they are popular, it doesn't mean they are right. And so if they have something to say that's positive, and I've seen it many times, people will grab onto it and go, this person who has a great amount of followers has said something, and therefore that is true. Okay, and as a result that becomes a trend and people really buy into it, and it's like, well, that's not necessarily true. It's one person who is very influential's opinion. Now, what about combining that with the opinions of other very successful people as well, and seeing where that goes? So just take that on board. But the first person you go to is the top people, and I strongly recommend, like I mentioned before, you try and be as effective as possible. You could read books, but it's better to go meet them, call them up, right? Email them, engage with them properly. When I built the 8-Step Startup course, what I didn't want to do was read a bunch of books, okay, and watch a bunch of YouTube videos and then dissect that information and stick it on my course. I wanted to engage with them. So when I read a book by a best-selling author, I then contacted the best-selling author and said, look, I'm building this course for startup business owners and for entrepreneurs. What is it, how could you help? Are there any pieces of advice you would share? And so I think one of the first ones was there's a book I read called Too Big to Fail by Andrew Ross Sorkin. He's a Wall Street journalist. He's a presenter on Squawk Box, I think, on CNBC or something like that. And he's a best-selling author and a major journalist. So rather than just reading his book and then spouting out stuff I'd learned from it, I contacted him and said, have you got any advice for the students of 8-Step Startup? And then he gave me some, and that was much more valuable. So go to the very, engage with them properly. Reading books, sure, it's all good, but get what you can from them. And these people are people still. They often, if you approach them intelligently, they have no problem at all with giving you an answer, as long as you ask them something, like I say, something intelligent. So hopefully that helps. Our next question is Priya Kaur. She asked, what factors do I consider when picking a business partner? This is a big question, because a lot of people ask, should I in the first place or should I not? And look, it's going to depend on every single business. One thing you might try, which I've done in the past, is kind of work in partnership, but for a trial period. And it's a good idea to have the conversation with your potential business partner and say, look, we don't know how we're going to work together. Maybe we're being good friends, okay? But we don't know how we're going to work together as a business. Let's have a period of seeing how it goes for a month and then decide if we want to be business partners officially. Because when you work with a business partner, yes, it can lighten the load because they are then going to do part of the work as well, but also you are going to take them on in the sense that they're going to have stresses at times. They're going to be low times, perhaps, just like you might. So it can be both a support, but also a bit of a kind of a drag you down weight kind of thing as well. So you've got to think about the person you're dealing with. Number one thing is you have to trust them, number one, and really that is shown through the ability for you to communicate with them well. There's nothing wrong with partnering with someone you don't really know that well or haven't met before or anything like that. Absolutely no problem. I've done it plenty of times. I'm actually partners in plenty of businesses where I've technically not met persons on the other side of the planet, and we've started recently, and there's nothing wrong with that. But that's not the point. It's about the fact that you must feel really comfortable with that person. If technically the business looks like something you could do well in, but you don't connect with that person, as business partners, do you really want to go there? Because it's going to be a full-on relationship. You can't be purely professional. There needs to be a bit more of a connection. When you're in the hard moments, you need to be able to lean on and rely on that person. So do think on that. I think ethics and values are really important as well. You need someone who sees the world in a similar way to you. Sometimes that can really be valuable. Obviously, sometimes it's good to have someone who's contradictory in personality, because they'll bring other things to the table. Maybe you're a bit introverted and a business partner you bring on board is much more extroverted, and that person, for instance, might want to take on the sales and marketing, and you want to be in tech and research in the back room. That if that works for you, then fine. But the point is, you should still be along the same lines in terms of ethics and so on. One of you might be a bit dodgy and the other one might be really straight-laced. Are you really going to gel? So you probably can feel that when you speak to people, and I think it's important just to think, if it doesn't feel quite right, then don't do it. I've been going over The Snowball, the massive book, who's it by again? Alice Schroeder, of course, about Warren Buffett. And one of the things that Warren Buffett says within the book is, if the investment idea doesn't bang you over the head like a caveman with a club, and like make you think this is absolutely something we should do, then it's something you should perhaps try and avoid. And I think that's the case here too. There's someone I started working with recently, and it's just the moment the opportunity came up, it was like, yeah, perfect. We're going to get on so well. I can just feel it. It's going to be a really good connection. The ethics and the values are there. We're very similar, on the same kind of wavelength. But look, bottom line is this: you need to understand that this isn't dancing around the subject, but what really is important is effort as well. And it shouldn't necessarily be always 50-50, because you might have differing roles. And it might be that one of you does need to put more hours in the other. It might be that you understand that one of you has a full-time job and one of you doesn't. So perhaps you reflect that in the equity. Maybe one of you has a third of the equity, one of you has 2/3. But whatever it is, it's worth bearing in mind that if someone's going to basically sit around and make money off your hard work, it may not be worth doing. Having a business partner can be a great thing, but sometimes it's better to have that thing done on your own terms. It really depends on the business, but I think there's no need to rush into it, and just think, is there trust? Do I really buy into this person? And your gut, for once, is what you should be listening to there. Do I feel good about connecting with this person? If there's anything niggly or not right, don't do it. Okay? And I've done this in the past. Just to finish, there was a friend I was going to work with, and I loved the person really well, really great friend, but it just didn't feel right for a variety of reasons. And it would have turned out to be a really bad idea in the end. And I'm glad that I didn't do it, because I did listen to my gut, and it just didn't feel right. And it was because I felt like I was taking on a lot of that person, as opposed to taking on a way to be more efficient. Okay, a couple more questions to finish. So Carolina Chic, what are things, situations and people that I should avoid at all costs? This is a really good question. Let's take each one. So firstly, things. There's probably plenty of things you should avoid at all costs, but the number one for me, the things you should avoid are hype things. So for instance, the shiny object, new things. Oh, this person over here seems to be making loads of money, I should go and do that. And it's hilarious, a lot of people are susceptible to really great marketing, and you tend to find that if marketed really well, people see, oh, this person has had an amazing webinar go out with great advertising. It's on everyone's newsfeed. Everyone's talking about it. The marketers behind this great guru's webinar are getting great traction with people. Maybe I should take a look. And you get, wrapped up in the whole thing. I'm going to go and do this. I'm going to be a real estate consultant, and I've never done anything in real estate in my life. Doesn't mean you can't, but it is something to avoid. When you've got your thing, don't drop the baton and go do something else. Focus on your thing. And as long as you can recognize that people are going to pass you by making more money, because that's the world you're in, that's cool. That doesn't matter. Let them do their thing. Because the people who are passing you by making more money in their opportunities are probably just right for those opportunities, it's probably the case they've got the right propensity towards getting success in that space. It doesn't mean you will. So stick to what you're doing, and that tends to be the best thing. Grind it out. And the thing to also understand is there's not a set amount of time for people to get results in different industries and different spaces. So you may be doing Forex and your friend might be doing real estate, and your friend might be making loads and loads of money really soon, and you might take 6 months to get anything. But it doesn't mean that you're doing the wrong thing. It means that maybe you have to just take that much time in that particular space. But if it's what you want to do, then that's more important, really. Okay, so just there is a degree of a line you need to get to point, and you say, look, maybe I should just stop now because I'm spent 2 years doing something, never sold a bean. But the point is there, you know, just be aware that people move at different paces and in different industries as well. So that's the thing to avoid. What was the other thing? What are the situations to avoid? Well, look, I think early on, because the questions I'd asked on Facebook were, what one thing would you ask when you're just starting a business? So just starting a business, the situations to actually avoid are those where you're not focused on generating new customers. At the very start, of course, you need to get your product ready, but engaging with people, networking and building your audience and getting new potential customers and converting customers is A1 important. It leads to more great improvement of your reputation as you help people, but it also leads to revenue, which you have to get. Otherwise, this wonderful idea will fail because you'll be out of money. You have to go back to job or something like that. So if you find yourself in the first weeks and months, increasingly, because it often creeps in, sitting in an office or sitting at your desk, polishing spreadsheets and planning. I'm going to work on my business plan a bit more. I want to do a new business plan. I'm going to read, structures. I know someone who works like this, and it's new every week. There's a new way of describing how they're going to one day do their business. That's a major concern. That's a situation. They are situations to really avoid. Focus much more on getting out there, meeting people. The admin and the paperwork, let that be the stress. And let it be a problem that you have too much paperwork to do because you've got so many customers. But you need to spend the majority of your time getting out and meeting people. Even if they're not going to be a customer, go meet an influencer. Go network with new people. Engage with people who can help you online. Connect and build these networks. That is way more important than polishing a spreadsheet that's empty because you haven't got any clients in it yet. It doesn't matter. Write down on a bit of paper, I've got 2 clients, they've been bringing this much a month, that's all I got for now. When the time comes that I've got 600 clients and I can't keep it all on a spreadsheet and I have to invest in software or decide how I'm going to work with them, let's cover that bridge then, across that bridge when we get there. But right now, at the start, the situations to avoid are ones where you're not getting out and meeting new people, especially customers. It's crucial, and that's a word to a lot of you because a lot of people I have in mind do all the polishing and they don't do any of the daily grind on getting new people. So every day you should be saying to yourself, right, where is my next customer coming from? Because if I've got a hot prospect that's going to turn into a customer, then the moment they turn into a customer, I've just lost my best prospect. So who's going to come next? Okay, and it should be 2, whatever you can do. Even if it's just 1, but 2, 3, 4 a day. How many new customers can I get a day? Or if it's a high ticket product, I should be getting 600 clients a day if they're buying a $2 product or whatever. I don't know, whatever it is. But new ones every day is so important. Spend time there, and the other things are secondary. That's the situation to avoid, is not doing that. Okay, and what was the other thing? And the people to avoid? Well, anyone who's not supportive. Now, the people to avoid at the start, anyone who's negative. An interesting twist on this point, though, is that you should avoid taking on board the emotion of those kind of people. But it's interesting. I think, I can't remember who it was who said this. It may well have been Seth Godin, actually, in Purple Cow, if I remember back. But there's this idea that you should seek out, or you should share your idea with people, and those that say, oh no, that would never work, actually spend a bit of time with them, because those people you can say, great, so you don't think it's going to work. Why is that? And the problems they come up with are the things that are in their mind as the major roadblocks. And you need to think, well, how would I overcome those roadblocks? Often it's just mindset, fear, and they just don't believe someone could make it, or they don't believe you'll make it. Maybe they're a friend or something. But if it's like, oh, because people don't do this or people don't do that, they may be good insights. And so sometimes it's worth listening, not reacting, going, well, I better not do it then, but listening and saying, so if someone thinks that it won't work, why do they actually think that? Because if they think that, maybe other people think the same. And so how can I build that into my message that actually that's not a problem or not a restriction? They may be saying, oh, look, the mindset of most people is this. And then most people won't buy into your product because of that. And it may be that you get that opportunity then to say, well, actually, I can see a way around that, and I need to share that message. So it's worth doing, but in the main, people are going to be negative and not support you. There's no point at all. People thinking that that's they're going to be protecting you in some way. It's not worth it. You need to fully believe that your product or service being worth doing and give it a good shot. And people who don't support that, there's no place in your kind of ecosystem. Okay. Final question. Let's finish up. So Ruben Kong. How do I calculate percentage equity when dealing with investors or angel capital? Okay, so it depends on the company. It depends on many things. Everything depends usually, because it may be that it's an idea you spent a long time building. But it also depends on how many angel investors you have. There's a bit of a rule of thumb, and obviously you wouldn't want to give more than 50% of your business away. I don't think that's a sensible idea. And there's a rule that tends to suggest that anything more than 40 really is a bit too much. So 40% of your business being given to someone else in return for their capital may be worth doing if you simply aren't going to be able to do it unless you get that kind of the money that they're going to be able to provide, and you have certainty that with that capital you'll get great results. A better way of giving away 40% though is giving it say 20 to one and 20 to another. But I would never ever give 40% of my business to one investor, for instance. I would seek out more and dilute the pool. I would say in the main between say 20 and maybe 30% is kind of normal for what is given away, or rather how much you've earmarked that you are willing to give away from your company. And I think that whilst that's a decent amount, it's not so overbearing, so it is fair. What you do need to weigh up all the time is, look, if I don't have someone investing in this, what's the business going to look like? Can I go on my own? Is it worth tolerating the slowness that's going to happen if I don't have an investor? Maybe it's going to be another 6 months before I can get to the level I could be at now. If you think about it, 6 months isn't that long, might be worth hanging in there. But if it's the case that it's going to be years till I can get to a level I want to get, unless I get this kind of investment, well, maybe just take the jump and go, because actually you can get on with it then. And I often say to people, if you look at it and say, I'm giving away, say, 20% of my profits to this person, but if you didn't have that person, would you be making much money at all? If the answer is no, well, then you should probably just do it anyway. Suck it up, because having a bit of a 20% haircut on your profits is pretty good when there are actually some profits. It's rubbish having all of the money for yourself, but no money or rather all of the percentage to yourself, but no money from which to take profits. So it's worth weighing up what you're really going to get in return. But break up that amount and say, I've got someone here who can give me some money. Maybe you start a little bit lower. Most people want to be fair, and look at it this way. Most people don't want to, if they're going to invest, they're not going to try and screw you, because you're the very person who's going to be running this business and getting them their return as well. So, it's like with the business partner question earlier. You need to make sure there's trust and communication and things like that, and that you're very clear on the parameters, how you're going to work and things. Maybe the terms are favourable, and that if the terms are good, then maybe you're willing to give them a bit more. So there's a lot of variables to bear in mind there. But with some businesses, I mean, I remember when I invested in one, I got a very low sub 10% amount, but the business I knew was going to be absolutely killing it, and they were fairly tight with what they were going to be willing to give, and actually we both felt good about that percentage, and it was well worth it because the company's making a great amount anyway. Whereas with others, if you're investing and you don't think it's going to make that much money, then you might not bother at all. But if you are going to, you probably want to get your money's worth, so you're going to ask for a decent amount. So there's so many variables here, but I would say, kind of to answer directly, how do you calculate it? Well, how much are you willing to give away? Can you even survive if you get a very small amount? But maybe say 20 to 30%. Ruben, you just commented there, let's say if I ask around 20 to 40k, is it reasonable to give 10 to 15% equity? It makes sense, but there are many other terms in there as well that we need to think about. Are they requesting the money to be given back immediately? We should message about this. You can PM me afterwards, Ruben. But are they wanting the money back right away? What kind of terms do they require in terms of repayment? Are they going to be on your back all the time? Are they going to be able to open you up into a network? Can they help you on that? Think about it this way. It's not as simple as giving someone equity in return for their money, because it could be that person's a massive influencer. If Gary Vaynerchuk, for instance, if I'm picking someone out of my head, was to give 20 to 40k for 10 to 15% of my business, but in addition, he was going to introduce me to his network as well. Well, that's worth so much more. So losing a little bit is absolutely no problem, because the overall profit's going to be so much larger. So it doesn't matter so much. There's a lot more variables involved in it, but it sounds reasonable what you're asking here, I suppose, but it is worth looking at the finer detail as well. It's always quite difficult. Ruben, I would PM me if this is something that's actually happening to you right now. We can have a chat a bit more. I said that was the last question. I hope that helps, by the way, Ruben, and thanks so much. It's a really good question. But there was one more here from JP Lott. Getting started with a great idea, with no money down and creating a need, would it be wise to partner up maybe for initial capital? Well, I think this kind of brings together the questions we had asked anyway. Look, it is wise to partner up if you have to have initial capital and you don't have any. And so that makes sense, otherwise you're going to go nowhere. But what I would say, as with many things, is it is often by many believed that capital is needed. It is often believed that more capital is needed than is actually needed. It's often believed that investors are needed in a company. Why? Because many others do it, it doesn't mean you should. And so I've found in the past that if you don't have much money, if you say to yourself, there is no option here, I can't get any extra capital, then the question gets asked, well, does that mean the company is not viable? Or is there a way around it? When you don't have any money, you think creatively. Can you barter with someone? There's so many people out there who can help you, who you don't have to use expense money on. You don't have to spend money paying them things. Give them something in return. There's plenty of people where I've done deals with them. In fact, there's people I work with right now who are providing services for my business who I don't pay them for. And in return I give them services as well. So there's a lot of give and take, and maybe bartering is a different way of doing things. Certainly in the startup / entrepreneur space, a lot of people have great niche services they can provide. And like I said earlier, if we go back to Ruben's point here, maybe you don't give any equity in return for some money. Maybe you give them something different. Okay, maybe you do give them equity and they give you less money than you wanted, but in return for giving you less money, they also have to give you a number of, set you up with a number of meetings with their people in their group that can help you out. So there's a little bit more that you can add to it. It doesn't have to be so cut and dry. So would it be wise to partner up? Well, if you need it, then yes, but I would always err on the side of looking at, well, can I do this to begin with on my own? Because when you bring someone else in, you add other dimensions, and when it's a singular person at the very, very start, that might make life a little bit easier. But you know, given what's been written here, if you have no money, you got a great idea, and you need money, and you haven't any, well then you're going to need to partner up with someone. So referring back to the question much earlier on where you go for your money, it might be worth bearing that in mind. It could be as simple as just getting a small business loan from a lender like a bank or something like that, and that might be really simple because there are no strings attached other than repay it at this rate on this date, and there's nothing else to it. But of course, you might get it from someone who is a bit more invested. It might be their personal money. And this is something I've personally done when I've invested in a company. They also get me as well. So I sit with them. For one company, I'm an advisor to their business. And so it's nice because for that person, rather than just giving the money with terms, which they might want to do because they're busy doing other things, they give them money, but also they can sit and help steer the ship as well. As long as they're not overbearing, that can be a really wonderful thing. Okay, so hopefully that helps. And thanks very much, JP Lot, for your question. Been really good fun. Thank you so much for these great questions as usual. It's been a bit focused on investors and so on, but I know that's always trending really. It's on everyone's lips at the moment, those who are starting businesses. So just think, you don't have to always have an investor. Sometimes you need one, but look at all of the different angles on it before you jump in, certainly before giving away equity as well. I'll catch up with you later this week. On Thursday, we've got our Q&A for sales, so do send over your questions for that as well. Have a massive week. Hope you're really enjoying January already, 2017. For everyone who's been sending messages to me, you all seem to be having a really great start, so that's good news. Whilst it's just an arbitrary date, it doesn't mean you can't make a fresh start and things like that. It's a good time to take stock and see where you are and level up a bit as well. Thank you so much for following this 8-Step Startup at the moment. If you're keen on getting into it, if you go to 8stepstartup.com, the site is updating all the time. There's the blog in there, there's the book list as well, so books I'm currently recommending. There are also access to the courses, so Basics of Sales and also the 8-Step Startup course. And coming a bit later on, I can't remember how long it'll be, in a few weeks time, there will be the course on making an online course. It's being asked of me all the time, so I'm going to provide that too. But otherwise, have a great day. Thanks for following, and I'll catch up with you soon. Like the video if you get a chance to, and I'll speak to you all later.